The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got almost 30 minutes to go until the start of trading, and this morning we're picking up in positive territory. Quite an open yesterday. We make it above 3,900 pre-market. We zoom in on the action around the open, get above 3,900 again briefly, and then the acceleration to negative prices begins at about noon Eastern Time. You trade from about 3,900, literally 1 point away from that price level, 38.99, and just like that, you traded down almost 2 full percent. 2 full percent in 4 hours of trading. Not the usual volatility you get in this market, though. That's pretty usual. And then guess what? Since then, the markets have popped 50 points from where we were at the lows. We're up right now near 38.70. You got the S&P. We're positive 0.9% coming into the open. NASDAQ 100, we're positive 0.9% as well. You talk a little bit of a sell-off. You go from almost 12,200 down to 11,000. What's the low there? 11,857 in the NASDAQ 100. Since then, we're back above 12,000, 12,020. Dow this morning up 224 points. That's 7.7% in the green. Russell positive by more than a full percent at 1756. Crude pulling back a bit. We just got back over $100 this morning. How about that? Crude up to a high of 124. You see it there at about 3 in the morning. Right now, we're about $3 off of that high. 97.16 for the price of crude. Gold contract this morning trading a little bit lower from where we just were in the last couple hours. Gold was up at 17.16. We're trading right now technically negative $1.60 for gold at 17.08. And we jump to notes and bonds. We got a little bit of lower price and higher yield, and jumping into it right now, you're talking about a 10-year yield right at 3%. Right at 3%. And you see, we're kind of coming right back down to the lows that we had yesterday about noon Eastern Time. Interesting, because that's where the market was sitting at highs at that price level. Not quite back up to the price levels that we had in the indices, but nonetheless, you got the 10-year sitting right at 3% right now. The 30-year, negative 21 ticks, pretty similar action, right back to where we were at about noon Eastern Time in notes and bonds. And we jump over to the VIX. VIX right now, slightly negative action as we have a positive market. You have the VIX at 2463 right now. Now, what was interesting yesterday is we had the markets coming into the open. You had the S&P up solid 30, 35 points, even higher than that at pre-market at one point yesterday. And meanwhile, you had the VIX elevated coming into the open. Always keep your eye on that, folks, especially, you did see the VIX pair some of the gains that it had, but it was still positive at noon Eastern Time, right before the sell-off in the markets. Now, when we got that sell-off, you had the VIX going from about 2440 up to almost 26. But that was a 2% move in the indices, and you only had the VIX popping about $1 or $1.50. When I saw the VIX was elevated, anytime you see it, folks, put it on your radar, because so often if you see a market that is going to open in positive territory from overnight trading, like we had the S&Ps up almost 1%, and meanwhile we have the VIX trading higher as well, not indicative of a strong market, doesn't mean that the market's going to trade lower. It did yesterday. Doesn't mean that's going to happen. But it's one of the indications of things that you can watch, because when you see an elevated VIX and you see the market's up almost a full percent coming into the open, something is not right there in that market. And yesterday, it took until 12 noon Eastern Time, but then, man, it was quite a sell-off in a big way. They were talking about the rug pull. That was quite a rug pull, man. When you talk about 2% intraday in the S&Ps going from 3,900 to 3,820, you don't get 2% runs often, folks. You get them all the time in this market right now, but not all the time in general. All right, let's jump around to other stocks with action. We got Netflix. Yesterday, you talk about some volatility, almost up to 200. You finished the session with a 190 handle for Netflix. They have their earnings after the bell tonight. They've got about a $28 move priced into their earnings. Quite the volatility, man. What's that? It's almost 15% you're talking about. Yeah, basically about a 15% move in either direction. Now, we'll talk about this a little bit later in the program as well. But when you're dealing with an elevated VIX and you're dealing with volatility in some of these equities, right? Trading options and trading it, looking for a move in either direction, very difficult when you're dealing with this type of volatility, folks. I mean, just take a look at the volatility to hold a put or a call, the implied volatility in either direction for the weekly. The $28 is just to hold it through the earnings event happening tonight. If you want exposure through Friday, you're talking about more than $30 implied move in either direction. Now that means you got about a $15 move in either direction at the money, and there you go, right? A 190.250 put is just more than $15, and a 190 call is just more than about $15 that expires, in 4 trading days counting today, right? Expires Friday. So not only would you have to be directionally correct that you're either going to go up or go down, but you would have to be directionally correct, and you would have to make up, what's that, 7%, 8% a move before you even break even on that type of a move. If you want to trade both sides and you want to trade just volatility, then you need a 15% move just to break even. You're not going to go get rich, folks, paying volatility premium to the tune of needing a 15% move in either direction. Now, don't get me wrong, right? Netflix, what did they move last time? Let's see. Let's pull it up. What did they move? Was that their move? I think it was. Let's put it back on the daily real quick. So they've had 2 drop-offs, okay? The last time they were trading earnings, you go from 510 to what, 400, so you lose 100, so you shave off about 20%. Okay, there you go, 20%, barely over the 15 volatility this time. Last time, they were up to 350 coming into the earnings event. You open the next day near 250, and you actually finish the session off at 225. So what did they lose, $125 for a stock that was trading at 350? So what was that, more than 30% was the fall off they had. Absolutely remarkable that this thing has traded from 225 then down to 162. You come into this earnings event. Right now, we got a little bit of a lift this morning. You're trading at about 193. You see, pretty much right in the doldrums of this. And when you talk about the company, okay, you get into the fundamentals of Netflix. You're talking about a company right now still valued at $85 billion. And they have a lot of work ahead of themselves, okay? You jump over to a company like Disney. Disney's had a Max Payne situation recently as well. Disney, you're talking about twice the value of Netflix. Now, interesting, Netflix had actually eclipsed Disney. Pay attention to some of these things happening, folks. Even I, when that happened, maybe you have an arbitrage trade, maybe you go long Disney, maybe you go short Netflix, all right, just things I'm thinking about. Even if you're an investor in those equities, maybe you're aware that they're a little bit dislocated. There's no way, in my opinion, that Netflix should have been double the value of Disney when you incorporate the fact that they're going to be some pretty decent competitors going forward. And then you add on top of it that Disney's got the parks business. It just seemed like in the long run, at least right now, the valuation should have been that Disney should have had higher value, and they do, to the tune of almost $100 billion right now, from $80 billion and change to $174. But at one point, Netflix, when they were trading at what, 700 and change, 699 or whatever they hit, they were well above Disney. Now, Disney at that time was like 200. They would double the company too. Both of them were in like the $300 billion range. Don't think Netflix can't trade lower just because it's at 85 billion down from where it is, folks. Many people have made that error, as this slide has taken place in many strong equities. Zoom, one of them in particular. Yes, 799 pennies. Still an $85 billion company. Netflix, they could easily be a $60 billion company and still have a path to success in the future. Tonight's going to be a big one, though, as they follow up 2 disappointing earnings events that have brought this company down to below $200. Stay tuned, folks. S&P is catching a bid, up 38 points. We'll be right back with our man, Kevin Hincks.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have markets continuing to rise. You're looking at an S&P right now. Futures positive by 42 points, right near the pre-market session highs at 38.75. That's positive by 1.1%. NASDAQ 100, you're up more than 1.1%, also making pre-market session highs 12,041 right now. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network, your program, Fast Market, with your host, Kevin Hincks, Tom White. And, man, we had quite a fast market yesterday on that drop-off. Kevin Hincks, good morning.
Good morning, Tommy. Yeah, what a difference a couple hours makes in a market, huh? But, that's what you're going to get around earnings season, Tommy. And, we're having some real interesting moves in the U.S. dollar, which is causing some people. All you've got to do, Tommy, if you want to know the importance of the U.S. dollar, is look at IBM's earnings. Beat on earnings per share, beat on revenue, talked about a currency headwinds going to cost them $3.5 billion between now and the second half of the year, and the stock is down significantly. So what we just talked about on the network is how you're handling. Everyone knows the headwinds in this economy, right? It's inflation, it's supply chain, it's currency, it's Ukraine. There's so many headwinds. These companies, the traders are going to want to know how you're handling them and how you see the second half of the year, Tommy. And that's what IBM wasn't able to deliver, is a clear outlook for the second half of the year. That's why the stock's down. So, yeah, currency headwinds, get used to that catchphrase, Tommy. You're going to hear it a lot over the next couple of weeks.
These currency moves, man, are just staggering. I'm not sure I've seen them, at least this sustained, at least on the dollar index, man, just at levels. We got euro parity, right? So, yeah, we're dealing with some serious levels that many of us haven't seen. And, yeah, I got to try to IBM up here. Their last earnings, some strong numbers, maybe pulling themselves out of it. You trade last earnings event from about 125. Within a couple days, you're at 140. You make it as high as 144 in the last 90 days, but just like that, we're going to be back to about $130 on those currency issues. We get Netflix coming up tonight, Kevin. I have it up on the Thinkorswim platform. It's up a few dollars with the market right now coming into the open. I have it up, and we have an expected move of about $28.78 for the event. We've got an expected move for the weekly options of more than $30 as of the close last night, just for the options that are expiring on Friday. What's your take on a stock where you have a $30 implied move and the stock's trading at $190? You're talking about more than 15% right now implied move in either direction. You know, when I look at something like that, Kevin, right, if I have a bias for the stock, very difficult for me to imagine putting money up into trade, especially a short-term trade on earnings, where I'm looking for more than a 15%. And don't get me wrong, I talked about in the beginning of the show, I think the stock tanked 30% the last time they had earnings. So obviously it's possible. But in my own head, I just want to get your take. Very difficult for me to think about paying up on premium when you have the VIX so elevated and then you have these equities that are so volatile like Netflix with a greater than a 15% move priced into the event. If you could just give us some thoughts when you get those types of numbers.
Well, you know, if you look at the Thinkorswim platform, Tommy, right now, look at this week's expiration. They're looking for about a $30.50 move. If you look 10 days out, another week from today, they're only looking for a $34 move over 10 days. So that shows you the effect of implied volatility. And what you should be looking at, what your viewers should be looking at when they look at that platform is, what do I think about the expected move? Do I think it's going to be more than $28 or less than $28? Because that's what you're trading in terms of, well, I don't want to buy this implied volatility. Well, if you think it could move like it did last time, yes, you do, right? Because you're playing the move. Now, do you think it's going to move the same as last time? We have no idea. That market maker move is part of the question, not the answer. So the question that you ask is, there's where it's measuring right now, that 28.78 on the expected move. Do you think it's going to move more than that or less? That's really what you're trading, Tommy. It's like a temperature gauge on the top of the platform. So, yeah, I mean, it gives you the information. It doesn't give you the answer, though, Tommy.
It's pretty cool, man, and it's especially cool when you get these types of numbers because it opens up so many different strategies that you guys talk about on the program when you have volatility priced into these equities, whether you're the one paying it, whether you're the one selling it, which is pretty cool because that's a lot of volatility, man. If you're the one selling it, risk on both sides of that trade, as you point out, you can be wrong. And boy, this stock, the last two earnings events, man, you're talking about huge gaps lower. Pretty remarkable, Kevin. 180 days ago, this thing comes into an earnings event just 2 quarters ago at above 500. And meanwhile, we're trading at 190. Netflix, the worst performing stock in the S&P 500. I thought they were just getting a lot of the headlines, but no, they in the first 6 months of the year, they got the crown. So we got Netflix, Kevin, coming out tonight. We have Tesla coming out tomorrow. We get the big tech stocks that kick things off next week. What are you guys talking about at 12 o'clock on Fast Market coming up today?
To start off, Tommy, we're going to look at the energy sector and take a real hard look at what's going on with the sell-off in energy stocks versus the sell-off in crude oil. And we're going to trade ExxonMobil. They got upgraded this morning, actually, Tommy. So we're going to trade ExxonMobil. And then, like Folio, we'll do a presentation on our feature stock, which is Netflix. And then We'll look at Abbott Labs, also with earnings out after the bell. So we'll look at 3 names. 2 of them have earnings coming up. And we'll take a hard look at the energy sector with ExxonMobil, Tommy.
Yeah, that energy sector, man. I was looking at Exxon even, I think, this weekend, checking out the dividend yield, almost out of curiosity, but always as a curiosity as an investor myself, still above 4% dividend yield right now, even with the pullback from 105 to 86. What do you say to investors out there, Kevin? Maybe give us a little sneak peek. Obviously a dividend yield on a stock like Exxon where you have it trading at $86, still off the high of 105. Pretty decent dividend yields for these stocks, and I don't see, and this is my own bias that comes into it, I don't think many of us see oil tanking anytime soon for the duration. We're going to be dealing with some real volatility in that oil market. Not a bad dividend yield when you're trading at 86 on Exxon, in my opinion, right now.
Yeah, ExxonMobil almost $20 off of its recent highs up to 105. But remember, when you're trading these energy companies, they have a lot of good things about them. Number one being the dividend yield. But you're going to trade that correlation to crude oil. Crude oil's moved from 130 or around 120 into the 90s, and therefore ExxonMobil has moved along with crude oil. But one thing their break-even is significantly lower than where crude oil is trading right now. So they are making money. They are buying back stock. They're returning money to shareholders. I mean, this is a company making a fortune right now. But remember, everyone talks about ExxonMobil making money right now. No one was helping them when they were losing $20 billion a few years ago. So now they're doing extremely well. So even though the stock trades with the overall crude oil, look at Warren Buffett increasing his stake in Occidental. So, I mean, these stocks are still very attractive and worth trading, Tommy.
No, definitely. I'm going to check out that segment, man. As I said, I was checking them out, whether it's last weekend or last week. I remember pulling up the dividend yields because it's quite a little pullback already. In my own opinion, at least you're not buying into ExxonMobil on that spike to crude at 130, right? We're sitting at just under 100 right now. But yeah, room for that to trade both directions. I know Oxy, my goodness, from $8 at the end of 2020 to $74 earlier this year. Well, Kevin, we appreciate the time, man, as always. We appreciate the education, and we'll be watching at 12 today, man.
Have a great day, Tommy. Thanks for having me on.
Always a pleasure. Folks, tune in every trading day at 12. They get some great stocks today. We'll be right back for the market open.
In a time of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve in a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. I'm looking at a weekly of the S&P here. When you take a look, we're up about 40 points, just more than 1% on the open right now. Pretty interesting that we've been chopping around right at the 382 for an extended period of time right now. We're sitting at 38.73. You make it as low as 36.39. So you're solid 250 points almost above those lows. But as you can see, pretty remarkable that we've actually been chopping around at the 382 for 2 months, folks. A little bit of a consolidation. Now, the NASDAQ 100, they just chose a different Fibonacci level. The NASDAQ 100 has been chopping around at the 50% retracement for the better part of almost 2.5 months. Interesting how time flies, man. We've been sitting at these price levels for 2.5 months. Extreme volatility on both sides of this. I mean, look at these weekly bars that we have in the NASDAQ 100. You're talking about weekly bars from low to high of what? Almost 1,000 points. Excuse me, 900 points, 900 points. Remarkable. You got low to high weekly bars of 8%, give or take. Consolidation in a big way. We'll see where we break out of that consolidation. That's the important part. The Russell, sitting right at about the 50% as well. The Dow, the strongest relative, as in you were at the 382. We got a little bit of a bounce there. The Dow, only about 5,500 points off of the high of 36,832. We jump back to crude. Taking a look at the shorter-term time frame. Crude market trading right near $98 this morning. You got the gold contract right now trading down $1.10 at 17.09. And let's jump around to some of those stocks that have their numbers coming up. Netflix catches a lift at the open. You're up $2.36. They're out with their numbers. Now let's see how those numbers recalibrate. So check that out. Remember, these numbers we were looking at had to do with the implied volatility as of yesterday's close. Numbers actually going up. They're adding volatility premium into this, folks. Pretty cool how all these numbers shake out, right? We were just looking at the implied volatility for the weekly options in Netflix expiring Friday. It's about $30. Well, guess what? Right now, you can get about $31. Yeah. And if you just want action for tonight, that's basically telling you that's $30. But it is interesting to see the volatility premium to hold Netflix options just for next week, not counting this week, is just about $3. So all of that volatility premium priced into the earnings event happening tonight. It's going to be an interesting one, man, to see how it hits the streamers. Netflix, they're trying to create an entirely different business model. I think it was Pershing Square Capital, right? Who was it? Einhorn that got out of his Netflix position, I believe, and he got out pretty quickly, lost a whole boatload of money. But one of the things he said when they got out, I think they might have gotten out after this last earnings event, was that they couldn't forecast and build business models anymore when you had the company basically going through an entire transformation where the financial metrics they're dealing with are almost meaningless, right? It doesn't matter how much money they're making right now of subscriptions if they have this entire business model that they're now going to shift to an advertising-fueled growth where you're going to start charging no money, have a free service, sell advertising for that model. It completely changes their business plan on that aspect of the company entirely. Very difficult to financially forecast where that company is going to be when they're basically breaking into an entirely different set of financials, marketing, growth, earnings, etc. Nonetheless, at some point, this company will find a bottom, folks. You're well off $700. You're trading under $200. I think I pulled it up. We're dealing with a market cap right now about $80 billion, right? Getting into the fundamentals. $85 billion right now for that company. Doesn't mean there's not room to go lower, folks. You've been as low as 160 and change. And you got to keep in mind, that's within S&P trading at 3,900. There's been a lot of very reasonable calls for the S&P that could easily inch as low as 3,400. Right, 3,200's on some of our radar. 3,200 would be the 618 of the entire move higher. Folks, we already got to 3,600 and change. You're telling me we can't go 400 points below where we were at? That would bring you to 3,200 and change? We moved 80 points yesterday, right? Just to put some context in things. But today, we're catching a lift in a big way. Notes and bonds, checking out the action here. A little bit of a reversal. We're probably just under 3% right now, the yield in the 10-year. All right, let's jump around to some of the stories I have pulled up here. We'll start it off with the housing start data this morning. Declined to the lowest level since September. Groundbreaking dropped 2% to 1.56 million pace in June. Single-family construction and permits fell to 2-year lows. That number out at 8:30 this morning. So residential starts declined 2% to 1.56 million. Here you are on the chart to see where we are. After an upwardly revised 1.59 million pace in May, you see the slight tick down there. When you talk about single-family housing starts, though, right, you get into that number, you're under where you've been. Basically, they're going back to somewhere in 2020 or so. Applications to build a proxy for future construction eased to an annualized 1.69 million units, also the fewest since September. I mean, it would make sense right now. You have rates rising. You have everybody talking about a potential recession. And that, yeah, here's the one. Single-family housing starts fell 8.1% to an annualized 982,000 rate. Meanwhile, construction of multifamily dwellings increased more than 10%. Single-family housing, man, we're going to be in the doldrums in terms of a supply shortage there for an extended period of time, it would seem. All right, yeah, Apple out with the news yesterday. They're going to slow hiring and spending for some teams next year. The company won't backfill roles or add new staff in certain cases. This has been the case with some of their competitors, as it brings out. The changes won't affect all teams, and Apple's still planning an aggressive product launch schedule in 2023, and that's going to include a mixed reality headset, its first major new category since 2015. So they're going into AI, and what's interesting here, mixed reality, right? That means like that headset should be able to see the external world while adding augmented reality into it. It's not just going to be the Facebook Quest type, which is virtual reality, because the Facebook Quest, you're not seeing the world around you, okay? What Apple's going to actually do is they're going to have a mixed reality, that's going to incorporate the world around you and then adding, whether it's augmented reality or whether maybe you're able to shift into virtual reality and back into reality. Quite the world, quite the times we live in, all the conversations. But nonetheless, Apple being a little bit cautious there with hiring, they've held up pretty well in this market. Yesterday, quite the fall off. That news having to do with some of it, but the market really cascaded. You had the market down about 2% yesterday. You get into the weekly, though, you see, right? The NASDAQ 100 right now, I just pulled it up. The NASDAQ 100 is at the 50% mark of its entire run, folks. If Apple was just where the NASDAQ 100 was, you would be trading $30 lower. And you'd be trading $30 lower, folks, on a stock that has 16.185 billion shares outstanding. You know what's so crazy? That number used to be 6.5 billion. That's where those buybacks really do matter and cut into how many shares there are outstanding. So let's call it 16 billion shares outstanding. Just if you were at the 50%, which is where the NASDAQ 100 was, you'd be $30 higher. What would that be? That'd be almost $500 billion shaved off the market cap. If you were just sitting at a 382, which is where the S&P 500 is, that would be another $15. That would be $240 billion in market cap that this stock would lose by itself. Point being, Apple has held up relatively well compared to the rest of the market. You could say, you know, a safety haven for some, as Apple just sitting about $30, $35 off its high, whereas, as I pointed out, the market's well below those price levels. All right, let's jump over to Tesla. We get Tesla with their numbers tomorrow. They're catching a little bit of a lift with the market, up 1.7% right now. Microsoft shares up 0.5%. We got Google up about 0.9%. Stay tuned, folks. We'll be right back. Go over some other equities with their numbers this week. We'll be right back.
TFNN has been your trusted source of analysis for bonds, metals, stocks, commodities, and options for years. And we are happy to announce that we are bringing that same caliber of analysis for the Forex market. Teddy Keckstadt has 30-plus years of experience in Forex trading, commodity risk management, Forex hedging, volatility, and so much more. Teddy releases his weekly Tiger Forex report every Monday morning with elite coverage of all major currency pairs, including the DXY, Euro dollar, Pound dollar, Aussie dollar, dollar yen, dollar Swiss franc, and so much more. Teddy will recommend specific trades when the market presents them and provide updates throughout the week when warranted. For the month of July, inaugural members to the Tiger Forex Report will receive 25% off the monthly subscription for as long as they're subscribed. Just use promo code TEDDY25 to lock in the added savings. This offer is good only for the month of July, so do not miss your opportunity to save on the Tiger Forex Report. TFNN, educating investors.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P's up 41 points right now. NASDAQ 100, you're up just shy of 1%. You're up 115 points, 12,030. You get the Dow just shy of 1% as well, up 262 points. I got a chart of the Euro-US dollar up here. Now, you'd be tempted to say you're getting quite a bounce here, okay? No longer at parity. We're at 102.45 right now. You did make it down to 99.516. Here's what I'll say, though, folks. That's not really a bounce in a market that has tanked over the period of the last about year and a half. Okay, now you could make the case, 123, you kick off 2021 at that price level. The slide really began in June of last year. Okay, you go from 122 in the euro. It's a one-way trip, folks, to parity, and we are still well within that downtrend channel right now. And I'm not sure how that reverses with everything going on in this market. We'll be talking to our man Teddy Kegstad tomorrow. He sent me an email yesterday, man. He's got some great stuff to talk about on the interview tomorrow. But he put out a great update already, folks, for his subscribers. Head on over to the front page of TFNN. Teddy's got a new issue every Monday out of the Tiger Forex Report. And this month only, folks, it's already July 19th, so you only got about 12 days left of July. You can save 25% on the monthly price. It's normally $97. That brings you down to $72.75. So $72.75, $72 per month, and you still get a 30-day money-back guarantee. So please check it out. He puts out new issues every week. We'll be talking to Teddy at 40 past the hour tomorrow. And yeah, we'll see where he goes. But Teddy, he's been talking about maybe 90 cents is where we get to on this euro-US dollar. We will find out. One thing that's going to impact that potentially is the ECB on Thursday. So the ECB is looking more closely at half a point hike this week. Official guidance is for 25 basis points. Policymakers poised to decide on the first rate hike in a decade. So I talked about yesterday on my program that the window was already closing on the ECB in terms of the market pricing in maybe 200 basis points of hikes this year. Now it's already back to 150 as they're not quite sure what Europe can handle. Europe's got some problems, man. They have problems. They have inflation like the whole rest of the world does right now. But they are in some economic woes, much more so than the U.S. right now. So how do they continue to hike? How do they even start? Right? They're sitting at negative 50 basis points, folks. They haven't hiked in 10 plus years. I think it's 11 years, 2011. And they're supposed to begin with 25 basis points, right? Now they're predicting a 50 basis point hike following that, which would bring them into positive territory in September, okay? And the market is figuring that they get up to about 1.3%. So that would be about 180 basis points from where we're at right now by March of next year, and that's where they sit for a while. We find out on Thursday. We'll see where they go. As of yesterday, the probability was about 80% that they go a quarter point, and there was a 20% chance that they go 50 basis points at this meeting this week. Not sure what those probabilities have changed for, but we will see, and they have quite a task ahead of them. And yeah, and here you go. Moneymakers see, oh, look at that. So it has. There you go. They see now a 50% probability of a half-point hike. Times change quickly, as compared with a 20% odds on Monday. Monday, also known as yesterday. Remarkable that the odds that rise that quick. So it looks like now we got a 50-50 call for whether it's 25 or 50 basis points on Thursday. Quite a quick change. Lagarde had left space to go beyond 25 basis points in a June 28th speech, days before data showed Eurozone inflation surging more than expected to a new all-time high of 8.6%. You could say, of course, they have to go big, right? Inflation's just like it is over there, over here. They're dealing with so much more problems, folks, so many more problems in terms of energy prices, in terms of not the strength of the economy that we have here in the U.S. So we find out Thursday where they go. And we got a 50-50 shot no matter what they do, man. I imagine that euro dollar is going to continue to struggle. I'd be very hard-pressed to see this having any type of dramatic reversal anytime soon. The situation just does not line up for it, man. We have higher rates. Europe, if they try and get there, they may just crush that economy, dealing with the higher energy that they have to deal with. And folks, this energy crisis, it's not going away anytime soon, unfortunately. There's no way that no matter what happens in Ukraine, okay, the world has changed forever. And you're going to see Europe try to gain more independence, as they should have already. We're seeing that in hindsight 2020 on their own energy, right? But that takes a lot of time. And until that's done, you're going to see elevated premiums for risk premiums for crude, for energy across the board, rightfully so, because the world has changed, man. Russia is just attacking democratic allies. That changes the whole scenario when they are a provider of energy to Europe. Okay, the risk premium on that energy is through the roof, and that is not changing anytime soon. That's why when you look at something like crude, you know, you're well off the highs. But folks, we were trading at $85 last October. All right, we were trading at $85 last October. You just got down to $90. We were trading at $77 almost more than a year ago. The point being, with everything that's changed throughout the war, right, we're right back to basically that whole premium that happened because of the war. Now, you can make the case that the buildup anticipated the premium that could result from that happening. But boy, when you're trading at 98, risk reward wise, what's the possibility we trade to 70 or 80 versus we pop back up to 120? I see a lot of risk to the upside right now when you talk about Russia being a player on the world stage in energy, and that scenario has changed forever. Let's check around to some of those oil stocks. They're going to be talking about some of those oil stocks at the show on Fast Market. You got Exxon up a bit right now, up 1.1%. And yeah, you see, I mean, Exxon, when crude was at $90, Exxon's trading at 80. Crude's at 87. Crude's at $100 almost. You get almost a 10% pop in the price of ExxonMobil to 87. So, you know, you have a yield right now of dividend yield of about 4.1% on this stock. Nothing to say, though, that this thing can't pull back to 70 or $60. The one thing that will help some of those losses, if that does happen, is the dividend yield goes up. But, man, that's a lot of losses if you do get a crude pullback to 60 or $70. Just very difficult. I mean, I can't imagine crude at $60. 70 or 80, I think, is possible. We just hit 90. $60 just seems like a fantasy right now with everything going on in this market. All right, let's jump through real quickly some of the stocks that we got coming out beyond the headline Netflix and Tesla. We got American Airlines. They're out with their numbers. Let's see. Yeah, they sure are on Thursday. So American's out on Thursday. You got about $1 move priced into their event for a $15 stock. These stocks just getting punished with the price of crude, man. American's out on Thursday. We also get Domino's Pizza out on Thursday as well. I think that's pre-market. Domino's, check out the pullback, man. 100% of the pullback. From the lows of 2021 at a price of about $3.20 up to $5.67. You make a double high and you pull it all back. Since then, we're bouncing a bit. You're up to 406. So Domino's, they're going to be out with their numbers on Thursday as well. I think it's pre-market. They got about a $30 move priced into their earnings. We also get AT&T. This stock's just been punished, man. Yeah, from last year at 25, you were down at 26. This year, not that bad, I guess, when you look at it. I think I'm looking at longer term then. Check it out. I mean, you put this thing on, that's a tough chart, man, on a longer term monthly basis for AT&T. You're sitting at $20. Before you're below most of the price action outside of 2002 and 2008 for AT&T. It's been a tough go-around in the last 20, 25 years. Stay tuned, folks. We got a couple other stocks. We got Sam Adams to take a look at, American Express, Mattel, Snapchat. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the market holding up relatively well right now, just pretty much where we opened 25 minutes ago, with the S&P's up 1% right now. So I mentioned we have a couple other companies out with their numbers. You have Sam Adams out with their numbers as well. You talk about a pullback in stocks, man. Woo-wee. Hard beverages. Hard carbonated beverages, not going to take over the world after all. Up to $13.49. We're back to basically below pre-COVID levels on Sam Adams to $3.27. You jump over to the Analyze tab. They're out with their numbers Thursday. More than a 10% move priced into Sam Adams, out with their numbers. Snapchat's had some severe volatility recently. You talk about some volatility, man. Only at $13 right now. Well off the $83 it was at less than a year ago. Tough to say that, man. This stock market is down 20, 30%. There's a lot of people, if you were just buried into a few stocks, man, that you just got punished. Snapchat, You're talking about almost a 20% move priced into their numbers. And then we get American Express on Friday morning. You're looking at a $6 move for a $145 stock. You also get HCA out with their numbers on Friday morning, I think. Yeah, $12.52 move for a $174 stock for HCA. Jumping around to some of the chip stocks. So Biden wants the chip makers getting U.S. aid to curb China investment. Seems pretty reasonable if you're getting $52 billion. These chips, man, I mean, that's just a national security issue, right? America, we need chips. We got to make sure China doesn't control them all. This story ties into it as well. As you have the Speaker of the House, Nancy Pelosi. I guess she's going to Taiwan. Should be the first speaker since Gingrich in 97, right? Is that what it just says? I think I saw that somewhere down here. Yes, she would. No sitting U.S. speaker has visited Taiwan since Newt Gingrich traveled to the island 25 years ago. China, not a big fan of that. This one's going to play out, folks, and it is not in our best interest to allow China to take over Taiwan with the chips that they make. That's what you're seeing some of those chips play out. Hopefully it plays out in some capacity for the betterment of all. But there are some severe political problems going on in terms of how that plays out. China, we saw it play out with Hong Kong. Taiwan's probably next, and we'll see how aggressive they get. All right, folks, stay tuned. Basil's out this week. We're going to have a replay this hour. We do have some guests for Basil later in the week. But then we got our man Larry live at 11, live programming.